Hi everybody. Yeah, day two of daily updates. I'm going to cover off BTC and SOL, and then some information on just total market cap, but viewed from a slightly different perspective. So we'll start with let's actually start with some really sort of high time frame stuff. So on the 104 day, which is more something you'd use for a little bit of bias than anything else. We've got possibility of an engulfment situation. So if we close above 189.270 today, we'll do two things. We'll end up creating a range trend, which is this one coming through here. But we may also create this hold level. So price may then have some kind of interaction between those two levels, sort of like a pump up and then a dump down to find support inside the hold before continuation to the upside. Or it may just come down, tap the hold. It sort of depends on if it closes up, and how far up it closes over this. But there should be some form of interaction between these levels after today. So if we flip down here to the 52 day, we're pushing into resistance from back here. Again, that sort of indicates that we should maybe open the next candle, come on up, tap that, have a bit of a retracement. It would be very bullish if this actually managed to get back up here in the next hour and open the next one back up above this trend, because this trend is not actually a broken trend. It's that candle was on it when it came down. So yeah, very bullish scenario would be to get back up above there before close. If we come down 26 day, it's looking pretty good. It's not the first time we've been above the 26 day trend. As you can see, it created two lovely blow off tops over there. Ideally, what we want to see is we want to see a candle open up here. We want to see a retest of that. We want to see it close with a body not touching, an accumulation, and then maybe that actually truly properly breaks that trend for the first time, and gives us more of a sustainable base to actually work off to any higher targets. As for now, what you see there doesn't really mean much. It can just do another scenario like what it did here and here. Give us a nice big long, but you're playing chicken with resistance. You just don't really know where it's going to stop. I would suggest that you pay very close attention to that. So here we have what could be a range. It's a little bit tricky because this candle is a 1 day candle on a 26 day time frame. It really shouldn't be there, but there could be something sort of in there, and you might find that this becomes sort of like a bull market top. There'll be something clearer, but certainly you'd expect, which will potentially show up later, but you'd expect something up around here to be a problem in the future. In fact, just looking at it, it's probably that. Let's just put that there, eh? So yeah, that's probably a problem for the future. Where would that be? 300s or higher, depending on that. So that was January. Yeah, so that's all created within the same year. That's the imposter candle there, which shouldn't be there, and then that's actually a proper trend. So yeah, it could be there. Much the same as ones like this were the ones that stop the price from falling any further. This is potentially going to stop the price from getting any higher. So just keep an eye on those kind of things for the future. Coming down to the 16 day, this is probably the first one that's really screaming retrace, just because when the trend moves from this point here up to wrong trend, but when the trend moves from this point here up to this point, because this is the new one indicated through here, the price will be opening underneath it. And because it opens underneath it, it's likely just to hit it and then come back down. Good news is that It should close above the break. Closing above the break is definitely going to be a positive thing, because it gives you a level of not confirmed support, because this is not really support until it's retested and then closes to the upside. Excuse me, just had a really nice breakfast. But it is polarity, so it's an area that likely will see a retrace, and it's an area where people who want to trade the breakout of this range, they're going to have their buys there, so it's an area of strength. So that's quite good. Overall, this time frame on the 16-day, ever since it bounced the trend down here, which is also a return back into this range. So again, sort of polarity. You've hit a trend, you've returned back into a range. There's a hold level in here. That was always going to provide support. And the people who have placed these orders in here and bought here, they're probably going to want to sell into its opposite, which is over here. So it's stepping stones on the way to higher prices, basically, but it may come down before it goes up again. But either way, I'd be really shocked if we don't see 210 in the very near future. Coming down to the 13-day, closing of the trend, same as the previous one. We've done that before. We've had these blow off tops. What we've never managed to actually do is close a full bodied 13-day candle after a retest over the top of this trend. It's never happened. So we've had blow off top, blow off top. So the next 13 days, how the price behaves is definitely going to be pretty important, to whether this thing is going to keep on moving up. Sustainably is probably the key word, whether it's going to keep moving up sustainably. There are some range trends to be a little bit conscious of, like that one there. So that's good. We're over the top of that. So it can support price. And there might be a few others, but for now, that's not looking so bad. Overextended on the 8-day. Our 8-day levels are sort of up around here, around the 220s. We're sort of borderline creeping back into that range, but if we close up a little bit more, that'll be good. So it's this range here. So the range started, it got swept for liquidity, it went up to the blow off top. So as you can see, we're sort of creeping back into that. If we creep back into that and then do a dive, we're basically just doing what we did here, which is sweeping the liquidity once again, retesting the break levels, retesting the trends. It's all just confluence really. X marks the spot. Places like this. That's kind of where you see prices dip into and then off they go. So, and on the 4-day, this may close down because obviously we've been heading down. But there's a lot of stuff going on in here from various different directions, so it's not at all surprising that it found support in there. The length of this wick determines whether or not we get another trend through there. If we do, then that's again a positive thing. It's actually showing momentum. If you start from a trend that's like this, and then the next one's like this, and the next one's like this, and the next one goes up steeper, it's momentum. Eventually it will fail, but the thing is, it's having 1, 2, 3, that's not so bad. When you get to 5 or 6, you're usually expecting the price to basically collapse. So so that's not looking too bad. And you need distribution to engulf it with accumulation to create a hold level to then break whatever trend comes next. So this 4-day trend is not going to move based on today's close if that stays blue. So it's actually a good thing. You don't really want to move it to there because that's then resistance at a lower level, whereas most of our resistances are up around these 200s. So you kind of want today to actually finish down on this time frame, just so the trend doesn't move. The next one could finish up, move the trend, but have a hold level to break the trend. So just thinking several steps ahead, like what are the possibilities of the way the structure is being controlled as we draw into the end of the day, not a bad thing to finish in that position for long-term sustainability. And this time frame, this trend will move to there. Unfortunately, that does give a 2-day rejection, but as you can see, we've got a break level there. So the 2-day rejection could simply just be that tiny little amount in there, like a dollar, $1 or $2. It could, yeah, that's all it really takes to actually fulfill the obligations of that adjusting. Or it could come up a little bit more, create a hold level, move the trend, but have what it needs to break it. So as we get down to these lower time frames, things get a little bit more picky. But the results of a lower time frame creating resistance or support doesn't mean anywhere near as much as when a higher time frame creates resistance or support. So this might just cause a 2-day retrace. But at the end of the day, it's not going to change the fact that 52 days says we want to go up. So, and then down to the 1 day. So this trend will move to there. So currently it's here. It'll reallocate to there because it's completely closed away from the level. And if it closes there, it creates a hold level here. So 186 to trend, so again, sort of $2. Still think that this time frame is really just trying to find its way back up here, but yeah, it's a weekend. It's been going pretty much sideways. They're really trying to induce liquidity and get people to open positions at high leverage in close proximity to current price so that they can short through, or sorry, run up through the shorts or run down through the longs, or based on the amount of news we have coming this week, potentially both. You know, these are the types of weeks where some good news gets released, the price just dumps and then flies back up in the other direction immediately after. Those kind of events need to be structurally planned out. So the market makers will create the liquidity to the top side and the bottom side. They'll keep everybody guessing. They'll make them take bigger risks because they believe the market is flat, and then they'll just spike up through them and spike down through them, and take out everything effectively, buying at a discount, selling at a premium, selling at a premium, and rebuying at a discount, you know, whichever way they go first. But it's yeah, it can be a pretty tricky week. So that kind of covers off most of SOL, other than the weekly. So that's the weekly, because we also do have a weekly close today. The weekly close is pretty much, if it stays there, it's going to be above the range trends, and it's going to relocate this trend, which is down there, to up there. Now, that means we can again have a big run up. It looks like it would probably head up into, you know, the 200s, but then it is likely to reject off that and then come back down to these levels again down here. So because it's on this range trend, but hard closing the bottom one, the most likely place that it would retest a minimum would be this bottom one at around 180, which and if it was to dive or try to return to these previous trends, maybe down to the 150s. So these kind of dives that you get, they would require some macro news or something, because I don't think they can't really be that fast, and sorry, they can't really be a slow bleed so much. They've got to dump it down into there, liquidate everybody, and then head back up. But yeah, certainly if it starts to plummet quickly on the release of some kind of news, I'll be buying down at those levels without a doubt. Okay, so let's have a look at BTC. Let's start here. So BTC is well and truly pushing through resistance at the moment, although it is, like, on a lower time frame, it's adhering to the lower time frame ranging. So looking at this here, we've got range trends here and here. We've hit the first one, rejected back, and gone back up again. So we're adhering to the lower time frame while pushing through the higher time frame. That higher time frame is not hard closed. It can't be for another 104 days. If normal cycle theory stays true, it probably won't be. Something up here will end up being the top, and then afterwards down it goes, assuming normal cycle theory applies. Um, so look here, 52-day, very much the same thing. We're ranging over the top of the trend. There are areas down in here. Um, you've got inverses around 110. You've got some of these levels that actually are down here untested. That they will probably be bear market levels, but if some really bad black swan comes out, then there's not a lot of point adding to your spot bags. If you lose 110, the next level would be 96 or something along those lines. So, and if you lose that, then there are actually some monthly levels and such in the 188, in 88s, that kind of thing. But again, you'd be expecting 72 if normal cycle theory exists. But hopefully we don't see a black swan. Hopefully we get one more pump out of this market before we all start to press the short button way more than we press the long button. And over here we've got 26 days. So there's a bunch of levels here on the 26 day. Yeah, a lot of them are actually under. Down there at 86. It actually, like, all jokes aside, it could happen. But that'd be your swan level, a dive down to grab that, then come back up again. It probably won't happen because they need to leave some of these levels for downtrending high time frame markets. But but we'll see. These kind of interest me a wee bit because so many people are expecting 110. So to me that says one of two things. Either 110 won't happen, or they'll go lower than 110. And so we've got hold levels down here that could be targeted by the rejection of that new trend. And those hold levels are sort of like 104, and that would probably freak out a lot of people if the price dumped down to 104 when they're all expecting 110. So just be conscious of these levels. And here we have absolute confluence with 110. So on our 16-day, we're about to close another 16-day candle. That'll give us a proper range. It'll give us a proper hold level. It's below a trend, so that can be dived. The trend moves from there to there, so that becomes resistance. So effectively a pump up into that and a dump down to 110 is sitting right there on the screen. Perfect. Every single move that happens in crypto is basically some time frame structurally reacting in the same way, but the thing is there's so many different time frames in play at any time. It's the fun thing's finding the one that's actually controlling it at the moment. Okay, that was one I was looking at yesterday thinking, oh, this could be it. So this candle might close down blue. If it does, let's get rid of that so you can see the higher time frame better. If it does, what happens is this trend that's running through here, because you then would have a full-bodied blue closure away from the trend, not only does it break the trend, which leads to downside, but it moves that to there. Now, when you observe this on a lower time frame, what you can see is that the trend was actually being followed up until we sort of randomly started to pump just before. But it could still come down under there, and we've got 45 minutes to go. And if that trend moves and it comes down under there, then once again, rejection of that trend needs to find some form of horizontal support level, and they all sort of start from about 112, 110, 109, 108, all these levels down here. So that's something to keep an eye on, and we're dealing with 13-day time frames, so whatever's going to happen in there, it's not long term. And here we are on our 8-day. We're still holding this trend here. Now, we're underneath that one. I think actually that trend has been relocated anyway, so that became that one. Yeah, so we're kind of just floating in thin air on that time frame, but we are about to create that. So you need another 8 days to hard close over the top of that trend. But down here around those same sort of 111 or lower levels, you have this trend from here, which would be looking for a retest. So yeah, there's plenty of confluence. Everything sort of says let's go up and then hit something and then fall down. On the 4-day BTC here, it looks like it might hard close outside of the trend. So if it does, it's going to try and move up. Again, more confluence to let's go up, take some liquidity, and then maybe come down. Only problem in this time frame is it doesn't really have a proper target. It could target the trend. That's where the trend will move after that closes. So it opens on the correct side of it, but it doesn't really have a hold level up here. It doesn't have a break level up here. It's really touch and go as to whether that even bothers to go up. It could just roll over and go down and retest something down here. And the way that's heading, you've got your 2-day trend coming through here. You got your macro 2-day from the previous all-time high coming through here. It looks like you're going to close under both of those trends. Yeah, it's going to create a hold level, which should give it the ability to try and attack the trend. But one or the other is going to win. So yeah, if this hold level does its job, it gets up over here. If it doesn't do its job, then the trend wins, or in this case, the trends, plural. There's now two against one. Then it's going to break down through here. So this time frame is really still in distribution. That's the break level for distribution there. And unless it closes over that, this is all just sideways. So that's the accumulation range coming up there. And you got sideways, sideways, flip to distribution, sideways, sideways, sideways. So yeah, you really, from a short-term perspective, that time frame is not really that great, especially because you've got all these big wicks that have come down into here. It means that any sort of lower time frames that exist below here, they're all broken. Like all the bottom of the ranges are broken because of these wicks that have dipped down. So, and yet this wick up here, nothing's been up here yet. So it's not so flash. So, and I don't actually have it open, but let's just quickly look at the 1-day. Because it is probably one of the most important actual time frames you can keep an eye on. So, first impressions, we haven't broken that break level. We haven't broken that break level. We have a trend here, which moved to there, which moved to there. We started on the trend, so this candle can't break the trend. It doesn't move the trend. It does give us that. There's a downside break level unbroken, and that's about it. These other break levels have all been hit through here, especially with that wick that's come down there. So there are a couple of range trends. One of them is this one. Yeah, so that's not a good sign to actually close a candle like that underneath that range trend. Really not a good sign. Something would have held that up. So we've closed under that one as well, which is not a great sign. We haven't retested that. but that's confluence once again for heading to 110 because it's a down facing range trend. We might be deviating out of the top of it, but there's definitely confluence to come back down there. And what else do we have running through here? We've got this one. That's it. That's basically our final. That's our final range trend in there. So it doesn't take much to lose this. You just close one day down in here somewhere, and then we go retest this fella down here. So there might be something else here. But that, what day is that? 31st of July, end of the month. Great day. So if that has a high probability of a retest, this has already been used, but can still offer support in the future. And that's the 31st of July. That's potentially a day we should be considering as rather important. And I would consider that a level that's rather important, because if it dives these trends, it'll try to grab the liquidity from the hold of this range, because that's the first, that's kind of the major range, the older range through there. So yeah, if it loses that, it's probably going to come down to here and maybe dive through there and then back up again. It depends on the FUD at the time. It depends on sentiment, etc. If you're really, really scared to buy and you see the price heading towards this, it's probably not a bad place to be buying. So that's BTC. Now let's look at these totals. So totals kind of just looking to open up on the other side of the trend. Actually, there's something really weird that's just gone on with totals today. As you can see, this candle opened, and it's a 2-day candle. It's got 2 days and 1 hour on it. That actually opened just as the market started to pump, so really strange. Can't say I've seen that kind of thing happen much before. And there's something really off about that in the data feed. But if I guess the first 2 hours of that candle is actually part of that candle, but it'll become a new day in about 30 minutes. Most of this stuff is still just under this trend. It's certainly under this trend. This is a very different way of looking at total market cap, because it's basically you're looking at from the perspective that an asset has value. So first of all, we're taking out all the stable coins, because it doesn't really matter how many stable coins you pump into the market. If you're trading volatile assets, you should be more concerned about the structure of the volatile assets. And pumping lots of stable coins into the market overall does, yes, increase the total market cap, but a lot of those stables, particularly on things like the Tron network, etc., are just being used for stable payments. They're not actually being converted in and out of volatile assets all the time. So we had this old range trend come through here. That's what rejected the entire market, as you can see, basically to the letter when it hit that. We came back down. We found support on this range trend that was from the beginning of the ranging, which was where the market found that support down there, and that's when altcoins and BTC started to show a bit more upward strength. But we're still in there and we're still going sideways. We've also got this one coming through here, and as you can see from previous losses of this trend, it causes down. You might get a pump up, you did there. And this is, I guess, where you've got to look at, the future, and the future is not always exactly the same as the past. But when you lose a range trend and then you do a liquidity grab and then you dump, that makes perfect sense in the way markets work. Well, we've lost a range trend. We've found another, we're going up. Now that makes it a little bit harder to determine whether we're going to hit this and then do the dump, or we've found this and now we're going to keep holding it to continue up. But there's so many signs across multiple time frames that there is going to be a retracement. So watching something like this on a 2-day, which is a relatively low time frame, if it actually finds its way to the other side of this trend and then closes a blue candle, then you'd expect a market-wide retrace. So that's definitely worth keeping an eye on. Coming through here, as you can see, we're playing with 4-day resistance. These are all things that can basically create a retrace in the market. Sorry about all the notifications. Again, playing with resistance. There's levels down here that we could retrace to. And you can see, along here, what happens sometimes when you retest the back of range trends, you just dump. So this doji here, like a doji in itself, is an indecision candle. So you got to be a bit careful with these when you're charting, because that doesn't actually necessarily mean it's accumulation. It could have been a distribution. Based on what happened after touching the backside of that range trend, I would say that the consensus of the indecision in there was that is distribution. That was your retest, and there's your dump. That came about after losing this range. And in here are your hold levels, so that's basically where it had to dump back to try and recover. So we've already got the hold levels. We've got this range trend running through here. It's quite flat. If we lose that one, then we probably come back down to here. So, and as you can see on the 16-day, that illustrates our price just moves between these levels quite nicely. So, and a lot of this stuff, because we haven't gotten over the top of this, we haven't hard closed this, we haven't broken this break. And I think one of the key things to note is that if you actually take into account that the dollar is worth less money now, we haven't actually broken this all-time high up here yet. So although we sort of congratulate ourselves on new all-time highs, we haven't really done that as far as the market cap goes. We've certainly broken those previous all-time highs, but yeah, we haven't really broken these ones from January yet, because the value of currency as a whole has just died so much. So and as you can see, haven't broken the break level. We've got this down facing range trend in here that may end up being a bear market support. And we've got the up facing one through here, which is the one that's actually carrying the price as it stands. But yeah, we're very, very far away from that. It's quite easy to get. Yeah, if we have some bad news, it's quite easy for it to come back to that. And I think this one's probably just important to show you, because these are some of the oldest supports that exist for price. And this is what it looks like when you basically have a blow off top or you transition into a bear market. So you'll go up above there for a while. There'll be plenty of opportunity for the major players to sell off, and everyone will be very euphoric, and then after that, down it comes. So that's effectively the kind of thing you got to watch out for. Now we've rejected off that twice up here. We now have this downwards facing range trend. It's coming through here, and we have this one coming up here. Now we're not hard closed inside here yet, and realistically, when you're dealing with things like 52-day timeframes, it takes another 52 days for whatever candle to either close up or down. Down means it hasn't gone close back inside this level. Up means it has, but there's really, what you see here could quite easily happen up here, and that might be it. So just trade safe. If everyone is getting really, really, really euphoric and overexcited, and you flip up a chart like this and you see this kind of thing happening up here, then yeah, just be ready. Everyone always says this time's different. They said it last time too. And here you go, this is one of the highest time frame resistances we've got. And so we've got an engulfment here to send the entire market up to here. But at the same time, we've got resistance to send it back here. So you are, as you can see, quite literally in the middle, smack in the middle. So if we get a retracement, it is going to, in my opinion, be a buying opportunity. And yeah, if we hit this level, I will be definitely closing a large portion of my longs. So that's pretty much where everything is for the day. SOL, BTC, total market cap. Yeah, feel free to chuck some comments in. Sorry, it was probably a bit of a long video, but there was a lot to cover. There were a lot of time frames closing today, and yeah, any comments, and like and subscribe and all that other stuff that YouTubers say. And we'll talk again tomorrow.